We have witnessed a major turning point with the economy, one in which it cannot simply be printed out of. Interest rates are literally at rock bottom, and the market has benefited from this. Investors and speculators are relying on another round of money printing and the potential for negative interest rates. The economy has clearly been at odds with the market, and this is not a good sign. You came here for the truth, so let me unveil that for you. Today we are going to talk about what's happening around the world. I'm going to show you the economic impact of what we have seen, not just here in 2020. These are coming to light now. These are showing up now. But if you look at the statistics, if you look at the indicators, this has been building for a long time. I've got a lot of information that I need to cover here, so let's begin. I need to talk about what's going on with trade. I'm going to show you that on multiple levels. I'm going to give you some details surrounding what's going on with different stores, different corporations, how they are impacted by what we're seeing here. This is the first one I want to mention: developments in global international trade and industrial production in April 2020. World trade volume decreased 12.1% month on month. The world trade momentum was minus 7.2%. World industrial production decreased 8.1%, and world industrial production momentum minus 5.6. All of these are pointing down, as we have seen. All of this data have been piling up. I've got some charts in a second. Here we're looking at the industrial production volume. It just shows you each instance, same conditions going on here. How many different stats do we have to pull up? Same exact thing. Everything has fallen off a cliff here at this time. In this one here, we're looking at the world merchandise trade volume, and you can see the exact same pattern. There's no doubt about it. No matter how you slice this information, it's not looking good. There have been some indicators. I want to tell you right now that after this dramatic fall, this waterfall that has occurred, some of them have come up a little bit. In the areas in which we have seen this reopening of the economy, stores reopening, people purchasing things, certain types of freight have picked up as well. That has been positive to these indicators. But as you can see in the news, areas like Texas and Florida, they appear to be reversing that trend. So we could definitely see this declining once again. I'm going to keep an eye on all of those stats and bring them to you over the coming days and weeks. Microsoft is permanently closing its retail stores. They had 83 retail stores, and I know a lot of people would say, well, who cares about Microsoft, or who cares about Apple, who cares about these companies? And obviously, when you're one of the biggest companies in the entire world, nobody's going to shed a tear if you're losing some profits. But that's not what this is about. This is showing you how the most expensive sector in this country, United States, if you're looking at Canada, if you're looking at other places around the world, retail occupies such a huge percentage. And if that is being affected by what we're seeing, if there's a huge shift in that where you're going to have less stores needed, if you're going to need less jobs as a result, that becomes a problem for a lot of people. The economy is impacted as a result. You cannot sustain a healthy economy by printing money, reducing interest rates, and somehow have a handful of stocks, 5 or 10 or so, that are very high, and somehow that makes things okay. It doesn't work like that. People need to be employed. They need to be employed. Right now, the continuing claims are at 20 million. The unemployment rate that they tell you is 13.3%. Even that fake rate, which the Labor Department admits on their own, is extremely bad. It is very high compared to what we have seen historically, and we know that it will be persistent for a period of time, especially because of what we're talking about right here. Nike CEO tells employees that layoffs are coming. Now, I don't think they have actually talked about the amount of layoffs that are coming, who exactly is affected by all of this, but we will see as time goes on. We have seen the same situation, not just in retail, not just in one or two sectors. This seems to be a big problem. Look at the financial sector. All throughout 2019, they were laying people off. That's before 2020. They were laying off tens of thousands of of people in that one sector, such an important one at that. The financial system is so weak right now. And if you look at the stress tests of the Federal Reserve, if you look at the information that they project to you in the mainstream media, you would say, no, that's not true. But then you look at the actual data and it tells a completely different story. You have to be aware of that. You have to look into it. That's what I try to do here on this channel. I know that there is information available to everybody who looks into it. So I highly advise everybody every day, spend time learning. It's so important. Another company, H&M Group, as they say right here, the majority of the stores were closed, and this has a huge impact on the sales, which, by the way, I think they said the first quarterly drop in revenue in decades. So you know that there is something huge going on right now. It's affecting so many different businesses. This happens to be just one of them. They have something ridiculous, like 5,000 stores globally. So I'm interested to see how many of their stores close down as they quote unquote restructure. This is a big one. You're looking at 2.2 million restaurants worldwide teeter on the brink of collapse. With demand plunging and costs piling up, these business owners are talking about how they're fighting to stay afloat. I'll look further into the article, but this is one sector that has been impacted directly, and it looks like with the reversal, places closing up again, Texas, Florida, just being two examples, that they are going to get hit hard. If there is much more of a surge, if there is more concern coming here, I think it's going to be worse than the first time around simply because the restaurants will just say, okay, I can't do it anymore. We got to close. Based on our estimates, we believe that up to 10% of all restaurants globally would disappear, with 20% or more going through a restructure process. This is a conservative case in our view. This is based on what they're talking about now, with the information that they've got at this moment, bringing them to these results. If we do have the so-called second wave where businesses have to continue to close, which it looks like at least in a limited scale that is happening, I think we're going higher up. That 10% is not going to be very valid. In terms of percentages, who knows really, but you're going to be walking down the street and there are going to be a lot of for lease signs in the different storefronts, and that goes for small shops, big ones, all types of retail, restaurants, any type of industry really at this time is being impacted. And as I said, that affects so many jobs. In the US, the industry employs 15.6 million workers. So just think about that. If you start having in a given city where thousands and thousands of these different restaurants are closed, surely this will be a problem for so many. OpenTable, which tracks restaurant activity via reservations, estimates that the failure rate could be even higher. I have noted that the reservations have picked up somewhat. There's no doubt about it. It depends on where you look. When you see it on a global level, things have gotten better, particularly with Germany and Australia. I've noted that they're almost completely open at this time, at least based on the OpenTable data that I've shown you here on the channel before. So I'm going to keep track of that and I'll let you know if anything happens to change. Mortgage bailouts suddenly swell as homeowners face new struggles. I've talked about this before. I continue to mention this. It is so critical to understand what's going on with real estate. I get comments every single day telling me there is nothing wrong with real estate. More people will buy. The prices are still elevated. I completely agree with that. I have shown you the statistics, and yet they still don't understand. I guess they're using too much leverage, so they have to create some sort of wall in between their thoughts and what I'm saying. I'm just showing you the information as it's posted in these relevant sources. The number of active mortgage forbearance plans rose by 79,000 in the past week, erasing roughly half of the improvements seen since the peak at May 22nd. As of Tuesday, 4.68 million homeowners were in forbearance plans, allowing them to delay their mortgage payments for at least 3 months. This represents 8.8% of all active mortgages. And you could say, as I continue to mention, if they're allowed to do this, they'll just stretch it out. There's no problem here. But this shows you the underlying problems that are taking place. It's not about just simply delaying payments. There's more going on. And you know, if you have been watching the Money GPS for a while, this is one of the best channels you're going to find for a little bit of humor in your day. You are looking at the personal consumption expenditure, the core PCE rate, and it is hilarious. Let's take a look at May 2020. Remember, this is your inflation rate essentially. And think about this, the word personal consumption expenditure, okay? What you have to spend your money on, right? That's what they're using to base all of this information on. But of course, they have to get rid of food and energy, because if you put that in there, it would show a more realistic version of what's happening today. So they need to remove it. And you're looking at an inflation rate right now, according to this statistic, of 1%. 1%. Now, if this isn't laughable, I really don't know what is. I could get up there, stand-up comedy, and I could show you this, and we'll all have a good laugh, because that's how ridiculous things are today. You know, Jerome Powell and the crew are getting up there after literally pumping the value of their own assets up, working behind the scenes to make that happen. They go and do their statement in front of the public and say, we can't get inflation up. I'm really sorry. We're going to try harder, okay? We're going to go back to the drawing board and pump up that QE so that it ends up into your wallet. That's right. And the people just take it in as if it's real. This article here out of railwayage.com tells you that rail traffic is still down. I'm going to show you three charts very quickly. You're looking at US rail traffic. The week ended June 20th. You could just see it's all in the red. Total traffic is minus 13% right now for the year to date. At the bottom, it breaks it down. You're looking at total carloads, chemicals, coal, farm products, and so on. We move over to Canadian rail traffic, same situation. Total traffic is minus 8%, and then you could see the breakdown below that. North American rail traffic, total right now minus 12%. No matter where we're looking, the traffic is down, down, down. I remember seeing the countless comments that were coming through, as well as the articles that were written, the talking heads on television, saying that because of what the government is doing, you don't have to worry about layoffs. They're going to essentially bail out the companies, giving them loans, and then they'll be able to keep their employees so you don't have to worry. We have already seen that trend reversed. Doesn't matter the industry, financial industry, the airlines, and so on. Check this out. Delta to warn more than 2,500 pilots about possible furloughs offers early retirement packages. It can come in any form, but this right here just shows you what's been happening to this industry. The fact is, for the next little while, there isn't going to be a return to normal. As a result, there's going to be less employment. However you want to look at that, be my guest. This is what it really comes down to. A new study finds the crisis could soon cause a big shakeup in the real estate market. As homeowners struggle to pay their bills, researchers say that many Americans are thinking about putting up the for sale sign. As with all of these different studies and surveys, there's a limited amount of people that they are doing the polls, that they are asking. In this case, you get 2,000 people. The number to me seems excessive, but you can see here, 52% are constantly concerned about making their mortgage payment on time. 47% of the poll say they're considering selling their home because they can't afford their mortgage anymore. That right there is shocking. Now you could say the people that they asked are not part of the majority and so on. Doesn't matter. We know what's going on. Most people are living paycheck to paycheck. You put them out of work, you reduce their pay, you reduce their hours, you start having a big problem. This is a global issue. It's going on today. It's not just about the United States. It's not just Canada. It's not just about rail traffic. It's not just about real estate. It is affecting everything at the same time. The entire global economy right now is going into a seizure, and it is not possible to reverse it by printing money. What the central banks are doing right here is using this as a cover to siege, to create an environment in which they can take over everything. thing. The vast majority of individuals will not believe what I'm saying. They will not understand what I'm saying, but I'm telling you it anyway because I believe that this is exactly what we are seeing right now. It is very clear to me, and the more I look into it, the more obvious it becomes. Well, that's all for this video. If you found it informative, just hit that thumbs up button. That's all I ask. About 10% or less of the people watching this video will give it a thumbs up. I want to thank you for being one of those people. If you want to check me out on Instagram and Twitter, I've got stuff going on there every single day, so definitely check me out at The Money GPS. Do you want to learn how to sell stuff online? You want to understand e-commerce, but you don't want to pay a dime? I've got a free e-course that well over 7,000 people have joined up to. You can get it at theamazongps.com. The financial system is complex and convoluted. It's designed this way so you don't understand it. It makes it very difficult to break down, but I have done this very simply in these 2 books. Check them out at the link in the description if you want the audiobook, themoneygps.com. Hold on, wait a second, don't go anywhere. Have you seen this video yet? There's a lot of data that you need to see. You can watch it at 2x speed if you have to. Click it, I'll see you there.